Hello everyone, and welcome to this shortest session where I would like to have a look at what's been going on in the markets, but most particularly what's been happening with gold. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So let me just take this away and we will get going. As I said, it's not going to be a long session because I really just want to focus on the gold market. I've got the futures up here. I've also got the GLD. I've got some miners that I want to have a look at, and in different time frames. And the reason I want to have a look, there's two reasons. First of all, we've had a situation earlier this week, back end of last week, where the traditional relationship between the US dollar and gold kind of reversed, in the sense that, as you know, the correlation is the US dollar weakens, or the dollar generally weakens, and commodities will tend to rise. Whereas what we saw very strong rise in the US dollar and a very strong rise in gold. That does happen, and it only tends to happen when we have a major crisis, and clearly we are in a major crisis at the moment. And it can also be the prelude to a huge panic, and goodness gracious me, there has been a lot to panic over, as I said, in the last sort of week or so. So gold going up and the US dollar going up is really a big warning sign that something is seriously amiss. Now, what's happened is, with the strong moves that we've seen in gold, not today. Today we've had a different picture. I've just put up the daily chart for the metal, and that is, it's now back at levels at the almost at the all-time highs. It's not quite at the all-time highs. If I just pull up the monthly chart here, this is, as I said, this is the April futures contract, and we can see here, we go right back over here to the left of the chart. This is back in the, my goodness, such a long time ago, 2011, when, you know, it didn't quite get to, let me just see, get my pointer out. Let's have a look at put the crosshair on. Didn't quite get to 2000. I think it was 1900 that it got to, and everyone thought, yeah, it's going to go to the moon. It never did that. It then, as we can see here on the chart, it then reversed. In fact, if we look at those two candles that we see here, we've got the up candle, which pushed it up to almost 2000. I think it got to, in fact, it didn't get to 2000. I know it didn't got to 19, or almost 2. It was a volatility candle, and then the following month we had a complete reversal, and we got a 2-bar reversal, in fact, and it went, you know, kind of reversed, tried to go up again, volume not fantastic, and gradually sort of slid lower and moved into this very long congestion phase, as we can see here, for a great number of years actually. And now, then the next time we had another sort of panic, as we saw here, where we had it back in 2020, obviously with the pandemic, and we have, you know, the highs of 2011 being tested, and now we have the third attempt at going back to those all-time highs. And I think the high that it's got to this month is just, it hasn't quite got to the 2020 levels. Now, so what we have is a market where it's, you know, it's testing these established levels that have been fixed, if you like, on the chart, as it back to 2020 and all the way back to 2011. And if you're a trader of not just gold but anything, when you see a chart with this type of price action, there is a decision you have to make. First of all, is, well, do you trade, as they say, the rip higher? Do you wait until it gets to testing these key levels and perhaps wait to see if there is a correction, a pullback? And that's certainly what we are seeing at the moment. It's really very, very difficult, because the other thing to bear in mind, obviously, is that markets, even when they reach key levels, that doesn't mean to say that they can't keep going on higher. And what then happens is, well, what do you do? Where's it going to go to? And you will read in the press, all sorts of numbers being bandied about. I mean, Bitcoin is a perfect example. When it was at 60 odd thousand, people were coming out saying it's going to be 150,000, 100,000 by the end of last year, 2021. Well, sure, yeah. I mean, why not? Let's just pick a figure out of the air. But it helps if perhaps we could be a little bit more, how can I say, I wouldn't, not so make such outrageous claims and just pick a number out of the air. And you can do this in a number of ways. One of the ways you can try and get a projection out is maybe to use Fibonacci. I don't personally. What David and I tend to use, we tend to use pivots, and in particular the Camarilla pivots, because with the Camarilla, it's, you're given these levels. You're given these levels on a daily basis, which I have here, and they are refreshed every 24 hours. Then I have the levels that appear on the daily chart. As we can see here, I've actually got 6 levels. We've developed these levels for ourselves. We've actually incorporated them into our own indicator, which is also available for traders to purchase. And they just give us, as I said, these price objectives. The levels that appear on the daily chart, they are actually in play for the rest of the week. The levels that are on these slower time frames, that's the weekly and the monthly, they are, certainly the weekly, they will be in play for the rest of the month, and the monthly ones are a little bit longer. I think they're there for the quarter. So, as I said, it's just something for us to have on the chart and say, well, it could get to this point. And of course, the thing that is going to determine whether it gets to that level is what you see down here, is the volume. The volume will validate any price move. And what we have here, this is the daily chart, we have a really nice example of rising prices and accompanied by rising volume. Then what happens? You then have to look at, well, what kind of candle are you going to end up with the volume that's underneath it? And this big wick yesterday appeared on the candle. So we know, despite the volume that's going in, the shape of the candle is telling us that there is weakness that is coming in. Maybe there's profit taking. There's all sorts of reasons. What also seems to be happening is there's all sorts of rumors, talks, comments saying that there's maybe there are going to be some talks about regarding the conflict that is going on in Ukraine at the moment, and that is obviously going to have a direct impact on an asset such as gold. So, looking at yesterday's candle and looking at the volume, given that you've got this massive wick to the top of the candle, the chances are today there would be some sort of at least a retrace. And the other clue that we have on this candle is that the range of the candle also triggered what we call our volatility indicator, because it tells us that the price action is outside of the average true range for this time frame. And what tends to happen, I would say 9 times out of 10, the price will then retrace to within the spread of the candle. Maybe you do get a reversal. We've had a reversal today, but what tends to happen is you see this price action, a big doji candle, volatility triggered, what happened straight into the spread of the candle, and we do tend to get like a congestion, and then the top of the candle and the high of the candle and the low of the candle also give you levels. So if you like, this is, we are at these all-time highs. So our first, if you like, price objective is the high of yesterday's candle. So whatever that high is, that is the one that is being targeted, that will be targeted in the forthcoming days and weeks. So that's the daily. What you may have noticed on the daily, if I just put that up again, is I said there were 6 levels. Now these levels are here for the rest of the week. Now we've actually gone through all 6 levels. So what do you do when all the levels are taken out in a very short period of time? You simply move through the different time frames. We go to the slower time frames to see if there is a level possibly that is, could potentially be the next target. So we will go and have a look at certainly the weekly and the monthly chart. But you also work in reverse, because as I said, the daily levels are refreshed every 24 hours, so fresh levels will be created. So sometimes, if all the slower time frame levels are taken out, you can simply go down onto the faster time frames. They will be just as valid. And of course, once you have these levels that are here for a period of time, they will also then become support should the price come back again and retest. And it's interesting that the price is now on the third of the 6 levels. The 2 most important levels are the third and the fourth. At the third, we often get, we'll certainly get a pause. Sometimes we get a reversal. And the other thing to note, of course, is this candle hasn't, obviously this session isn't over yet, but look at the depth of that candle, the range of that candle, and look at the volume underneath it. Are we going to see an anomaly? And what we do with anomalies, anomalous candles, is we look over to the left and pick out maybe a volume bar that is very close to what we see, to what we see today. Although do bear in mind, with the session hasn't actually finished yet, and at the close of, when it rolls over, this session, well, actually, given how much it's fallen, is it actually validated by the volume bar that we see underneath? But as I said, because the session hasn't actually finished yet, we really do have to wait. Now, I just want to go back to what I said at the beginning, when we were seeing a situation with both the US dollar and gold rising in tandem, which is really, trust me, you don't want to see, because that tells us there is, something horrible is happening, and clearly reflected in what is happening at the moment. But what's interesting is I've got here, this side moved over to my MT4 platform, and you can see there's a very, very similar chart pattern to the MT4 of this broker. It's the CFD version of the gold price, but very, very similar chart pattern on the daily chart, and on the daily chart of the dollar index. We can see here we've got the we've got the volatility at this is actually the 24th of February, when everything kind of kicked off. The retrace into within the spread of the candle, then really gold started to motor higher, as we can see here. It's gone through the R6 on the on this chart, as we've seen on the futures chart, and the dollar has pretty much followed it. So at the moment, kind of moving in tandem, because when we see the dollar fall, as I said, the usual relationship when things are normal, you would expect gold and all commodities actually to move higher. And this also brings up another the answer to another question that I'm often asked is obviously, to trade futures, you do have to have a certain amount of starting capital, and it can, not everyone is fortunate to, to have that. So by moving to a platform such as MT4, MT5, you'll find the brokers there will offer a version, if you like, of what is, and I've got gold, silver, I've got oil, I've got natural gas. Each broker is different. Some offer a very comprehensive list of of instruments, others, not quite so much. And the nice thing about using something like an MT4, MT5 broker is you can even, you can download a simulated account, a demo account, and they don't tend to time out anymore. When we first started, you were given 30 days and that was it, and they timed out. And if you were starting and you wanted to learn about the markets, you were constantly having to change brokers, but they don't. Sim accounts they just let newbie traders have them, and you can practice. You can see this stuff, you can compare, and as I said, you can have access. It's not just, what I'm trying to say is MT4, MT5 brokers, they don't just offer foreign exchange. In fact, if I give you a view of the symbols that they offer, this is my own MT4. That I actually primarily use this for Forex, but as you can see here, I mean, not only do I have Lord knows how many Forex pairs, but I've got the VIX, I've got versions of all the major indices, I've got various cryptos on there, and I have literally, these are all stock after stock, not just US stock, but there are European stocks and UK stocks. I think there may even be some Australian stocks on there. So as I said, these days, and it's free. Whether the demo account has all this availability, but you could open an account literally with a couple of $100 and you should be able to have access to all this. So just wanted to make a point on that. Now, to go back to our levels, let's just see what the weekly chart is telling us for gold. And where are we? Let's just pull that down a little bit here. What have we got on weekly? No, nothing. We've escaped the monthly levels. We are way trading above those. So let's just move to the monthly chart. And this is where it gets a little bit interesting, because as we can see here, this is today's reversal, if you like, on the price action, and it's not quite, but it's at what we call the R5, so 2-1. It didn't quite get to 2-1, which kind of is in this this ballpark here, back to 2011. So it's tested these all-time highs, as I said, back in 2011, over here in 2020. Didn't quite get there, but we're support and resistance levels. You have to be a little bit flexible. You have to give it a little bit of give either way. They're not rods of steel. You have to be a little bit flexible, but we are in this sort of general ballpark area, but it also corresponds with a pivot. This is the fifth level pivot, which is 2-1. Now, if it gets through, again, volume will validate that. Where is it potentially? Where is the next potential pause point? And it's up here. It's at the R6. And what are we talking about? We are talking about 2-1. I would say just below 2-2. I know it's not hugely, different from the all-time high, but it's something to have, if you like, on the horizon. Price action, it likes to have a target, it likes to have a price objective. It's just the way the markets work. Traders like to know, well, if this happens and that happens, where do you think it's going to go to? And of course, the other thing to bear in mind, the levels are there. If it doesn't get there, well, what's going to happen next? Where is it going to maybe retrace to? Where is it going to correct to? So we have these levels. Now, these are price-based levels. What we also have on here, we have volume-based levels derived from the volume point of control, which is actually hidden beneath this the accumulation and distribution level, which is another price-based level. So so we've got two lots of resistance. We've got the resistance based on price, which is also coinciding with these all-time highs. We've also got the volume resistance, let's say in the 2-1. So if you were a bull, you would say, listen, if this is going to go high, it's got to take out the 2,100 level, and it's got to take it out on some decent volume, as it were. So that's one thing to consider when something is trading at an all-time high, what do you do? How do you try and sort of project out where is this going to go to, other than just simply, looking at a chart and, picking a figure off the right hand on the price axis and just, oh well, I think it's going to get here. At least have something to hang it on, as it were. And as I said, pivots are one of the ways that you can do it, or if you like, you can certainly use Fibonacci. Now, a couple of other things, as I said here. I've actually got the GLD. The GLD is the ETF for gold. It's investors, primarily investors, move into it where they don't want to go directly into futures, but they want to hold maybe gold as a hedge, as I said, against inflation, against the terrible things that are happening in the world. And it's interesting to look at the price action. It's had a much deeper it's had quite a big correction. This is the weekly chart. The price action will mirror what is going on in the futures market. Again, we have a volume as well. We've got this big deep wick to the candle, but this is the weekly chart, so we don't know how this is going to finish by Friday. I also mentioned there's two other ETFs which are really interesting, and that is the miners. Often people tend to think that with the price of say something like a metal like gold going higher, then the miners will automatically follow that price. Well, not necessarily, because if you think about it, price of a metal, in this case gold, is going up. Yes, the incentive is there to open more mines, to provide more supply into the market, because there is demand. But it takes money, it takes time. You can't just go and dig this stuff out of the ground. And sometimes if you are, it comes to a point, if you oversupply, then the price doesn't necessarily, if there's too much, then you fulfill that demand, then the price doesn't actually move as much. But what's interesting to look at the price is to see how strongly it's actually following, if you like, the spot price and the futures price, and the GDX, which are the big mine, the big mining companies. It's interesting. You can see again the kind of congestion, and the price has been sitting below the volume point of control, and it's looking to break higher. As I said, it broke away from the volume point of control last week with this big up candle. I said the volume wasn't terribly exciting. This is today. I mean, I'd hope you can see it. It's putting in a doji. Let me just move to the daily chart. So let's see what's happening on that one. I've got it down here, the GLD, because I have got some levels on GLD. There we are. Yeah, I mean, yes, that was yesterday. Very similar to what we saw on the futures. Actually gapped up. Immediately went into we've got the volatility, spiked through the 6th level, and it's actually because this trades on a physical exchange, it actually gapped lower, and that's because we have the reversal in the futures market. So lots of rising volume, a gap up open, but you ended up with a wick to the top of the candle and volatility. So yes, we were going to get a reversal, but and it's been quite a sharp reversal because it has to factor in what is happening on the futures. The GLD is of course backed by a physical gold as well. And sorry, this is the miners. I do beg your pardon. I was talking about the GLD, the GDX. These are the miners, right? The other one to look at is the GDXJ, and these are junior miners. These are the smaller companies. And what's interesting here, again, very similar price action that we can see. If we let's go to the weekly chart, and what we're seeing here, not quite such a positive picture as the big mining companies, because up ahead for the junior miners, you've got the volume point of control, which will act as some very strong resistance if it even gets to the volume point of control, as I said, on the weekly chart. And just for completeness, let's see, I've got the GDX here on the monthly. Where are we? Well, the positive news is the volume point of control is down here. We're above this was resistance. It's now support. It's kind of moving high, and we've got some really nice levels ahead, clearly defined. You know, where are we here? This was the top back in 2020, and it kind of sold off again. This was you know, due to the pandemic, but at least we have some levels. We've got some clear targets, if you like, potentially for the miners. This is the GDX again, but the volume underneath it, you know, it's not fantastic. And if we look at the GDXJs, which is the monthly chart, very, very similar. Let me just expand that a little bit there, and we can see just how you know, how much they have sold off since this was the peak at 2011. A really sharp sell-off, and just really going nowhere for a long time. Bit of positive, it's above the volume point of control, above these strong, have been acting as resistance, above that. But again, you know, the volume is going to have to validate if it's going to be a genuine move. And again, we do have some levels that are there as a kind of projection. So despite, as I said, we've had these strong moves in gold, we've had this very strong move in the dollar. As I said, if you understand, you know, be aware when the dollar and gold move together, as I have done, says John, it is really serious. The thing to be aware of is that you do get this strong momentum, you do get these fast and furious moves when the volatility kicks in. Certainly with the volatility indicator we have here, you are then prone to, you have this snapback, if you like. Now, there's one other aspect that I want to mention about gold, and that is obviously Russia is under severe sanctions. Its central bank has been sanctioned before the invasion of Ukraine. Putin, you know, built up this war chest of currency reserves, you know, to see him through the campaign, if you like. Well, he's not able to access those reserves, but what Russia does have is masses and masses of gold. It's got a huge gold holding. Now, normally he would be able to go into the market somewhere, someone will buy that from him, but if he's able to, there's all sorts of talk saying that the other banks, and they're also going to sanction any sale of gold. You'll always find a buyer for gold somewhere in the world, but assuming he can sell some of his bullion because he needs money basically, then that will also have an impact on the gold price. So keep an eye out of what is happening on the sanctions side with Russia's gold holdings. Although I did read today, they're not thinking of selling, they're actually accumulating, they're buying. They do have their own, there are gold mines in Russia, and what's happening is the gold is being taken you know, in-house, as it were. Right. That's what I just wanted to focus on gold, as I said, because of this unique price action that we have seen over the last since the 24th of February. Not many people talk about it. It's, you know, I've read comments saying, oh, okay, the you know, gold prices are going up, the dollar's going up. Well, it doesn't normally happen, but there's no explanation as to why. It has happened in the past. You look at the charts. I think the last time this happened was, I think during the Greek crisis with the Greek debt crisis, and then we saw a period where gold and the US dollar went up because there was a threat to the whole global financial system. So, and if you do trade gold, you know, as I said, be aware of the usual relationship between gold and commodities and the US dollar. but also be aware that you do get this situation, and it does indicate a period of huge stress, geopolitical stress, financial stress. With regard to the indicators that you've seen on the screen, they are our own, myself and my husband David, and they are available from quantumtrading.com. I had the NinjaTrader ones. If you just click on the NinjaTrader tab, it will take you to these are all the indicators. Just let's have a look. Where is it? The Camarilla levels you will find there, and it's $97. If you learn more, there's a whole bunch of videos there are on how to use them. You get messages with them, and there's also support pages. That's what I'm trying to say. And not only with for indicator NinjaTrader, we've got them for MetaQuotes, MT45. They're also available on TradingView and also for TradeStation. And if you want to catch up with what I'm writing about on the markets, I put my analysis on my own blog, which is annacooling.com. These are also the books that explain the VPA, the volume price analysis methodology. This is the book that is sort of it started. It was my first book back out in 2013. Explains the concept of this relationship between volume and price action. But I also do have a couple of pages that I also write on. One is annacooling.com. This is on Facebook, and there's also a Forex page. I tend to just now focus on these two pages. And for those of you who may be interested, this was not picked up the wrong one. Right, apologies. Okay, this was not done by myself. This was done by a YouTube channel called financialwisdomtv.com, and he has very kindly, the guy who runs it, has very kindly done an absolutely, I think, a brilliant video on the book. He actually taken the book, explained it, has spent a lot of time and very professionally done explaining what VPA is all about, taking as I said, taking the book as the basis, and I'm really happy. It's it's had 31,000 views. For me personally, every trader that understands volume price analysis, takes volume to use in his analysis is one more trader that I hope we can put on the road to consistent success, because it is the only leading indicator that will validate what you are actually seeing on the chart. So it's called, the site is called Financial Wisdom. It's not just my book. He's done a whole series of books explaining, spent a lot of time and effort putting the concepts of not just my book but other people's book, and here it is: price action, volume is validation. It's brilliant, absolutely brilliant. I was absolutely thrilled that he has taken the time and effort to do this, and it looks like he's had 2,000 likes, which is fantastic. Can't say any more than that. So I'll stop it there. I am going to do one on oil because the price action has been very interesting today, to say the least. But I just wanted to focus on gold, as I said, because of this unique situation that we've had since the 24th of February. So thank you so much for coming along. I hope you've enjoyed it. I hope you've learned something maybe that you didn't know before, and hope you can join me next time.